Article 49, Import of Concerned Goods. This article establishes the tax obligation for persons who are not registered for VAT when they import concerned goods into the UAE from countries outside the implementing states. The article ensures that even if the importer is not a VAT-registered person, they are still required to pay VAT on the imported goods. This rule prevents gaps in tax collection, ensuring that all imports are subject to VAT, regardless of whether the importer is part of the UAE's tax registration system. 1. Scope and applicability. This provision applies specifically to persons who are not registered for VAT. It covers only the import of concerned goods. It applies to imports coming from outside the implementing states, countries that are not part of the GCC VAT system, or countries not currently recognized as implementing states by the UAE. 2. Obligation to settle due tax. A non-registered person who imports concerned goods into the UAE must pay VAT, due tax, at the time of import. This tax is required to be settled directly to the relevant authority at the point of customs clearance or through other mechanisms defined in the executive regulation. 3. Timing of tax payment. The due tax on these imports must be paid on the date of import, as it is directly linked to the customs clearance process and goods may not be released by customs without such payment. 4. Settlement mechanism. The executive regulation sets out the detailed procedure for settling VAT, including how the tax is calculated and the documents required at the time of import, such as import declarations, invoices, or shipping documents. It also explains how customs systems collect tax from non-registered importers and outlines any special administrative procedures or applicable exemptions. 5. Compliance requirements for non-registered importers. To comply with this provision, non-registered persons should determine whether the imported goods qualify as concerned goods and stay aware of the current list of implementing states. They must also be prepared to settle VAT at customs at the time of import and understand the settlement mechanism outlined in the executive regulation. In addition, they should maintain proper import documentation, including commercial invoices, bills of lading or airway bills, import declarations, and customs receipts showing VAT payment. 6. Importance of executive regulation. The executive regulation is a critical document for understanding how to apply Article 49 in practice. The executive regulation explains the procedural steps for VAT settlement, the administrative forms that must be submitted, and any applicable exceptions or special cases. It also describes how customs systems are linked to VAT collection processes, and non-registered importers should review it regularly to ensure compliance. For more details, contact us.